Good morning and welcome this morning to the basics of cryptocurrency, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I am joined in today's discussion by my good friend Jim Ferraioli, who's the director of crypto research and strategy at Charles Schwab. I'm also joined out there in the chat by my good friend Connie Hill. She's going to help facilitate the conversation, keep that conversation going. So welcome to all of you. And as we get into this, we'll introduce Jim here again in just a moment. Couple of quick things. This has been an interesting experience. These four particular webcasts, the first three, this is the third of our four-part series. We're going to add more as we move along in this segment. But this has been an interesting ride, learning a little bit more about cryptocurrency, learning a little bit more about how it works, how investors may gain exposure. And that is today's topic, how we may gain exposure to cryptocurrency in a portfolio using some various methods. So we're going to talk about that today. But as we get into this, I want to really quickly jump into a couple of quick housekeeping items, and then we'll bring Jim on board and talk a little bit more about the specifics of our topic today. Remember that everything we talk about, simply for illustrative and educational purposes only, is not any kind of a recommendation or solicitation of a particular strategy or account type, or especially a particular symbol or anything like that. We're going to use some technical analysis in this discussion today. Schwab doesn't recommend, however, the use of technical analysis as a sole means of investment research. It is, along with fundamental analysis, probability analysis, theoretical. It doesn't guarantee what the market is going to do. Past performance, no guarantee of future results, of course. Now, when we talk about digital currencies such as Bitcoin, it's important to remember that they are highly volatile and not backed by any central bank or government. That is perhaps one of the reasons why they exist, and we've talked a little bit about that. But because they lack many of the regulations and consumer protections that legal tender currencies and regulated securities have, there are specific risks. So be aware of those risks. Understand that cryptocurrency related products also carry through some of those risks, have a substantial level of risk, may not be suitable for all investors. So investments in cryptocurrencies, cryptocurrency affiliated products, companies that have a large exposure to cryptocurrency share some of those risks. So cryptocurrency products are something that if you gain exposure or looking to gain exposure in your portfolio, understand the risks associated with those products before considering any strategy that includes those cryptocurrency products. When we talk about things like digital assets and blockchain, new and developing, and the risks associated with those digital assets may not be fully developed, may not fully emerged until that technology is widely used. So, TBA on more risk, right? We're going to be using the thinkorswim desktop software platform here this morning, specifically the paperMoney version. The paperMoney version is a great learning environment. However, it is not a guarantee of how the market may perform in the future or how you may perform in that market. So be aware of that. And there are some limitations and differences in the way that the paperMoney platform works versus a live trading platform. Also, when we talk about derivatives around virtual currencies, because another way to gain exposure potentially, that may involve unique and significant risks. So when looking at things like futures products, if you are going to trade futures products, remember that that requires separate trading authorization. It is not suitable for all investors. It has significant risks associated with it. But specifically to virtual currency derivatives in the futures realm, make sure that you read the NFA Investor Advisory and the CFTC Customer Advisory on virtual currency derivatives as well. So as we get into this, long list, Jim, of disclosures, but it's important. And I think I made mention of this in a webcast the other day, that the rules that we have, I've got some friends in aviation, and they say that the rules in aviation are written in blood because they come from accidents. The rules around things like making sure that we understand the risk of a product like cryptocurrency, that's written in financial losses, right?
Yeah, that's a great way to put it. I mean, this is a new asset class. over the years, it's gotten matured, but it's an asset class that works like no other traditional investment. There's different things you have to consider when it comes to custody. And so again, I think that's a great way to kind of phrase it. It's a knowledge paved in financial loss.
So we talked, Jim, in our first session a couple of weeks ago. We talked about the idea of what is a cryptocurrency. Last week we talked a little bit about how does a cryptocurrency or how do cryptocurrencies work, and that relationship of miners and the blockchain and so forth. Today we're going to talk a little bit more specifically, though, about how people might gain exposure in a portfolio to cryptocurrency. And that's why I spent so much time in those disclosures, again, talking specifically about some of the products around cryptocurrency, because that's really where our focus is going to be. Next week, we're going to talk about some of the forces that drive cryptocurrency prices when we get into things like the halving and and burning and those types of things that people hear about. But as we get into today's discussion of gaining exposure to cryptocurrency, we're really going to kind of get into this idea of what some of the products are, the back and forth of how investors or just the general public may gain exposure through a variety of different means. And then we're going to talk about some specific instruments. Now, there are some that we can't talk about yet. There are some that we can't talk about because it would prevent us from recording and archiving this particular webcast. But we'll talk about those in general terms. And then there are some specifically that we can discuss. We'll talk about that as we get into this discussion. But Jim, let's start out by talking about this getting exposure to cryptocurrencies on the part of just kind of a regular person walking down the street.
Yeah, so there's a couple kind of ways, I would say non-financial investing focused ways of getting exposure to cryptocurrency. So the first, you could mine it, right? This is how
Yep.
the Bitcoin blockchain is maintained. Miners validate the blockchain, they validate the most recent set of transactions. And if you were the first miner to solve that hashing problem to produce the correct output, you are rewarded cryptocurrencies. And so for Bitcoin or any other blockchain ecosystem, if you are a validator on that network, you can be rewarded Bitcoin or the affiliated cryptocurrencies for validating that network. Now, from a realistic perspective, as an individual, you're unlikely to be mining Bitcoin and earning rewards. Some people are, so passionate about Bitcoin that they choose to still run a mining rig just for the sake of the network. Um, you know, but for the average investor, that's probably not a viable path of receiving cryptocurrencies. Another way you can accept it as a payment. Again, these are cryptocurrencies. They were developed to be the native currencies of decentralized payment networks. And so there's businesses where their point of sale systems are designed to incorporate them. If someone has an individual wallet, you can just send them it. I bought a pair of shoes. I paid the shoe salesman in cryptocurrency instead of traditional currency. That's another way. If you already own certain cryptocurrencies, such as Ether on the Ethereum blockchain, the process of validating requires staking your cryptocurrencies. Now, again, as an individual, you're unlikely to be a big enough presence on that blockchain to be validating, but you can contribute your holdings into what are called validator pools, where they pool you with other users on the blockchain, and that actually can earn you a share of that pool's validation reward. So there are ways to earn it. And so for a proof of stake blockchain, such as Ethereum or Solana, that's actually similar to earning dividends, stock dividends on a stock, where you're getting a dividend in the native form of that cryptocurrency. And so those are the most simplistic ways of gaining exposure to cryptocurrencies. Um, but most investors choose kind of more traditional routes through financial products.
I know one of the things that happens is, or one of the challenges I think that's happened with cryptocurrencies is establishing these rails between what we might call the day-to-day world and the crypto world, right? The, the ability to utilize cryptocurrency as that payment for tangible things that you can hold in your hand. I mean, get it from the standpoint of, the account. You've got a figure of a value in an account, and you transfer that to somebody else. But it's that rail of being able to. I think the famous example is at the outset of Bitcoin, and it's even celebrated as its own day, the Bitcoin Pizza Day, where in the early stages somebody traded, I think it was what 10,000 Bitcoin for two pizzas.
Yeah,
So
exactly. So the biggest hurdle has always been getting like how do you actually receive this? Like it's
yeah,
not built into the traditional financial system. And so that's been a hurdle in terms of adoption. And it maintains something you need to think about. If this is something you plan on using for payments, how are you going to integrate that into like your daily life? And again, it goes back to the idea that most people today aren't using these as payments. They're primarily
yeah.
using these as investment tools.
I know I go down to my local convenience store, Jim, and I'll just bring up this particular example and we'll talk about it. And then I've got a question that's out there in the chat that I want to address. But I know that I go to my local convenience store, and sitting in the corner of the convenience store is an ATM machine, an automated teller machine that's got a big Bitcoin symbol on the top of it, suggesting that anybody, not necessarily investors, could use that to either acquire or deposit, I suppose, Bitcoin, right? And convert US dollars into Bitcoin. Let's talk about that for just a second.
Yeah, I've seen those. I've never used one. I believe it's a way, again, that you can receive Bitcoin that's been deposited there by the people who operate those ATM
Yep.
machines. Um, quite frankly, it's an expensive way to do something that's already digital in nature. There's probably, less kind of friction. Um, Methods of acquiring it. Now, again, I think we went back to that comment I said earlier, where from an adoption standpoint, getting your hands around kind of this technology of integrating a wallet, how do you actually get it? I think the ATM maybe helps some people who are having their trouble wrapping their head around this. Like, what do you mean it's digital money? And so if it's an ATM, it's something they can relate to. Oh, I get it. I go to the ATM, I put in my bank account information, and I can withdraw money. So maybe for some, it serves as something to make this a bit more understandable. But from a practical perspective, there are much cheaper and better ways than using a Bitcoin ATM.
Sure. And before we move on to this next segment, because we're going to now start to kind of move into some of these areas that we've mentioned, how do you get exposure beyond the mining process and the payment process and so forth. And this goes back to a discussion that we were having last week about wallets. One of the questions that comes up is if we have crypto of one form or another, does that stay secured, or is there a means to move that to a more secure storage? We talked a little bit about the difference between hot wallets and cold wallets. I just wanted to review that really quickly before we get into this next discussion of the companies that maybe have exposure to cryptocurrency.
Yeah, so if you have a wallet, again, what the wallet holds are your private keys that give you access to cryptocurrencies that's held at public addresses on the blockchain. And so you can use that to transfer um, Bitcoin to different addresses held in different wallets, whether it's in a wallet hosted by an exchange or a financial institution or a self-custody wallet. And so just because it's in one wallet doesn't mean it can't be moved. As long as, again, you have your private keys or your seed phrase in case you lose access, you can always kind of re-access that wallet and move it around.
So I think we're somewhat familiar, probably, Jim, with the idea, and I think maybe this will tie this all together. The idea of having shares of stock, right? As an investor, maybe we're familiar with owning shares of stock, and we hold those shares of stock at a brokerage, for instance. But there's also something else that we could do with those shares of stock, and that is register those shares and then have those physical paper shares delivered to us. And I think that's maybe a little bit akin to kind of this idea of holding shares or excuse me, holding cryptocurrency with a brokerage or in a wallet versus having it in your own, say, for instance, cold wallet that you maybe maintain at your home, right?
Oh, 100%. Yeah, it all comes down to what your comfort is with custodying that security. You can hold physical stock certificates. You have to worry about where you keep them, what happens to them if you when you pass
Right.
on. And these are all the same things you have to consider with cryptocurrencies. And so again, a lot of people will opt to not hold the physical stock securities because for them, they're maybe less concerned with putting it at a financial institution. And again, cryptocurrencies are the same way. A lot of people want to hold these as an investment because they think this is a growing space, right? Uh, Not necessarily every investor is concerned with the aspects of a centralized financial system or censorship, right? And so
Yeah.
again, it depends on your individual use case, but for the average investor, there's probably an appeal to having someone else custody it for you.
Okay. So Jim, and I appreciate that, and I think that's an analogy that's important for people to understand is that it is very similar, especially Jim, as we start talking about in the future the idea of staking and tokenization of shares of stock to cryptocurrency, which is a topic that I think we've got slated for one of our later webcast or later series in this particular webcast series. But let's talk a little bit now about this idea of getting exposure to cryptocurrencies. And this is an area where we have to be a little bit circumspect when we talk about some of the methods in which investors can gain exposure. So I'm going to give a real quick disclosure here at this point before we start talking about this in terms of things like buying and selling spot cryptocurrency and trading cryptocurrency futures and trading or investing in exchange traded products or funds. In all of these circumstances, whether you're trading with spot cryptocurrency, whether you're trading cryptocurrency futures, or either you're trading or investing in exchange traded products or funds that their holdings are entirely or primarily cryptocurrencies, there are risks. All of those risks that we had associated with those that we talked about. Make sure that you're aware of the product that you're trading. If you're looking at trading futures products, make sure that you understand that futures have leverage risk as well as other risks associated with them. Make sure that you understand that that requires a separate trading authorization. It is none of these products are suitable for all investors. And none of the discussion that we're having has any bearing on suitability for your particular circumstance. We're not looking at your account. We're not looking at your particular profile. We can't do that. So these are general disclosures as well. So be aware of that. But let's talk really quickly about this particular method of gaining exposure to cryptocurrencies through some of these, what are, I guess, quote unquote, more direct means of gaining exposure to the movement in cryptocurrency prices, Jim.
Yeah, so these three methods, again, you're getting directly linked to the directional moves in cryptocurrency prices, right? So
Mhm.
the most basic one, you could buy or sell a spot cryptocurrency. So this is, as an example, you are purchasing Bitcoin, you're holding it in a wallet, whether it's self-custody or custodied for you, right? And so the performance of that holding is going to be directly linked solely to the price of the underlying cryptocurrency
Right.
that you own. So if you own Bitcoin, Bitcoin goes up in price. What you own is already Bitcoin, is it right? So you're seeing that appreciation. If it goes down in price, you're directly seeing that depreciation. Cryptocurrency futures are similar to others futures contracts. It's an agreement to buy or sell an an asset at a future time. And so its value is directly linked to the underlying value of the cryptocurrency. If you have an agreement to buy at a future price and that price is moving towards that value, and ultimately exceeds it, you're going to see appreciation. And so again, it's directly linked to the underlying price of the cryptocurrency that futures contract is linked to. And finally, you can trade or invest in exchange traded products. These are uh, investment vehicles that hold spot cryptocurrencies directly. So again, you're getting that direct exposure to the changes in the price. And there are also exchange traded products that invest in the futures. But again, they're ultimately tied to the underlying price changes in the cryptocurrency.
Yep. And in this particular slide, I've got an example of what a Bitcoin futures chart might look like. In this one, I've got an example of what an Ethereum futures chart might look like. We'll look at those again as market measures here when we go out to the thinkorswim desktop software platform in just a moment. But I just wanted to give a couple of quick examples of that in terms of this, perhaps this method of gaining exposure to cryptocurrencies. Now we're going to kind of switch gears a little bit because now things get a little bit more extended in terms of their relationship, and there's a couple of different layers here that we're talking about. We're talking about companies that have exposure to cryptocurrency because they hold cryptocurrency as their primary business model. That is their goal. And then we're going to talk about companies that have exposure to cryptocurrency either because it's a part of their business model to have that, but that's not their primary business, or they have a substantial portion of, say, for instance, what otherwise would be a pile of free cash flow that's tied up in cryptocurrency. So let's talk, Jim, real quickly about some of these companies that have direct cryptocurrency exposure as their primary model, if you will.
So what you're referring to are called digital asset treasury stocks. And so Strategy, which is listed here, that's the largest one. And so these are public companies that exist solely to acquire cryptocurrencies. And so Strategy owns over 800,000 Bitcoin. They're the largest digital asset treasury company. Historically, the these tend to be a volatile play on the underlying cryptocurrencies. They act as leverage. A lot of them will issue shares to acquire new cryptocurrencies, and so that can dilute the existing shareholder. Some of them also issue preferred securities as a means to generate cash to acquire new cryptocurrencies. And so, again, in up markets, these can see relative outperformance versus their underlying
Mhm.
cryptocurrency because they act as levered proxies on that. But in down markets, that same leverage exists and they'll typically underperform. And so that's one type of a crypto stock.
All right, so let's take a look at another type of company, and this is a company that also has cryptocurrency exposure, but it is not their primary business model.
Yeah, well, so we skipped the exchanges there, and it's worth commenting. So there are publicly traded stocks where their primary focus is cryptocurrency related, but they don't exist just to accumulate cryptocurrencies. And so that would be companies like Coinbase, which operates the largest US crypto exchange, right? And so fundamentally, their value is tied to cash flows and forecasts of how their business will grow over time, as opposed to just the price of the underlying cryptocurrencies. Now, on this slide, right, companies with cryptocurrencies exposure. These are traditional companies that may just want to hold some of their treasury, but not all of it or in cryptocurrencies. And so, as an example, Tesla is a company that holds Bitcoin on its balance sheet.
Mhm.
Block, this is a payments company. And not only do they produce equipment that can be used for mining Bitcoin, uh, you can purchase Bitcoin through them. And they have the means to allow businesses and individuals to transfer Bitcoin amongst themselves. So they do have some revenue that's tied to the underlying price of Bitcoin, but ultimately they have their own business. They're a service business, they're a payments business. And so
Sure.
the underlying Bitcoin prices can influence these their corporate profiles, their earnings profiles, their balance sheets, because if you hold some of your corporate treasury in Bitcoin and Bitcoin goes through a big rally, you've just seen the value of your underlying assets increase. And so theoretically, there should be a benefit to that towards your market valuation. But the core product or service that these companies offer is not directly linked to cryptocurrencies. NVIDIA used to be used to produce chips for mining Bitcoin. You haven't been able to mine Bitcoin on an NVIDIA GPU for probably about a decade now. But an interesting thing is, a lot of the times, some companies will find themselves correlated to the price of Bitcoin. And
Mhm.
that can be because maybe there's this view that there is still a Bitcoin proxy, but it can also be that Bitcoin is just correlated at that moment to other high growth areas. And so it's something to consider as well that there are companies who are kind of sometimes seen as Bitcoin proxies because there's a strong correlation at that time. And, so all things to consider when investing in crypto.
Sure. And Jim, I think this brings up a really interesting point, and it was a comment that was made out in the chat as well, is if there is the ability to, say, for instance, and again, not talking about specifics, but if there is the ability to trade spot crypto or crypto futures, for instance, versus a product that has either, like we talked about with the treasuries or the cryptocurrency stocks that have some exposure, why would an investor choose one versus another? Why not just trade spot instead of trading an instrument that has its own expenses and charges and characteristics and risks and so forth, right?
Great question. So ultimately, every single investor has their own different perspective on why they want to own something.
Yeah,
So looking at spot specifically, if you don't want to have to worry about the whole custody aspect, right? That's a reason to not trade
hmm
spot. One of the benefits of trading spot is cryptocurrency is currently classified as property. So if you're an active trader, there's no wash sales. You don't have to wait 30 days before trading in and out of the instrument. So again, for an active trader, there's a compelling reason you might want to be in the spot itself.
sure.
Some people like the idea of cryptocurrencies as a growing and emerging and maturing technology, and so they would like exposure, but they're not really sold on, needing to self-custody something, or they don't want to be dealing with margin and futures. And so for someone like that, they may see the appeal of just thinking of it as, okay, this is like owning a growth stock. So instead of owning just the cryptocurrency, I could own a stock that's either involved in the industry or acquires it for me. And so it's different perspectives. On the digital asset treasury side, a lot of the people that invest in these tend to be people who are also investing in spot. And so one of the
Mhm.
core uh, features of these digital asset treasury companies is they're trying to accumulate what is ultimately a scarce asset. And so the more success these companies have, assuming they don't have to sell, that just means that less trading supply is for the rest of the circulating cryptocurrency. So again, it benefits those who are holding spot in addition to seeing, short term, it can act as a levered proxy on the underlying price. So there's different reasons why people invest these things, and ultimately you have to decide what's right for you.
Sure, absolutely. I was just going to say, Jim, and just by way of disclosure, that neither you nor I are tax advisors. We don't even play them on TV, and so we're not dispensing tax advice in any way, shape, or form. We have resources that can do that. If you want to talk to our financial consultants at a Schwab branch, that's a great way to have that particular conversation and go down that road. But again, just to be clear, in this particular webcast, we are not providing that information. But what I wanted to do is I switch over here to the thinkorswim desktop software platform, and again, specifically the paperMoney version, is I wanted to talk about and look at some of these products just as market measures. Again, when we talk about some of these direct products, uh, so that we don't have to get into the realm of trading, talking about the trading futures and those disclosures. By the way, I do talk about that in my trading futures webcast on Tuesday mornings. I'll show you where to find those resources in just a minute. But I've got a grid that I've put together here on the chart, and this is just looking at Bitcoin, Ethereum futures, and Solana futures, three of the common futures that are available on the thinkorswim platform. We're using these as a market measure. And so this is a 1 year daily chart of /BTC, which is the Bitcoin futures continuous contract, and you can see that we've seen a little bit of an upturn today. It's been in generally a downtrend. Moving averages have kind of been rolling over a little bit, but that gives you a perspective of what Bitcoin has been doing. Got a relative strength index here showing that it's gaining a little bit of strength at the moment. Again, not a recommendation, just simply looking at this from a market measurement perspective. If we shift over to the next in the grid, which is /ETH, which is the Ethereum futures continuous contract here, something similar. And that is one aspect to pay attention to, is that oftentimes, Jim, these cryptocurrencies will move, at least from a spot perspective or a futures perspective, will move in correlation with one another, but not necessarily an absolutely perfect correlation. They're not uh, correlated one to one with one another, are they?
Yeah, there's usually a high correlation, but it's not one to one. If you think about the broader crypto market cap, Bitcoin represents more than 50% of the total market cap. And so what you see is if Bitcoin is rallying in general, the rest of the crypto market will be rallying to an extent. And a lot of the times, these things are more volatile than Bitcoin. And so if Bitcoin's up, as an example, 2%, you might see a smaller cryptocurrency up 4%. People like that
Yep.
in up markets. That's also a feature of down markets as well. So something to be aware of.
Volatility cuts both ways for sure. The last one that I have on here is, and this is, I think, a good example of that. This is Solana futures and the continuous contract for Solana futures. And you can see that kind of relative nature of volatility here, where the Solana futures are up today on a very similar move. You see a very similar technical picture from a trend perspective, but you see Solana up 10% on the day, you see Ethereum up 9% on the day, and you see Bitcoin up about 4.5 to 4.75% on the day. And I think that's a good kind of overview of that relative volatility of those different products. Yes.
Yeah, that's I mean that's the best way to put it. And so we would expect that to continue. Most of the activity that happens on these different blockchains is really just a function of
Mhm.
what's happening in the broader crypto market. So as prices are rallying, you're seeing more people using kind of DeFi platforms on
Yep.
these, Solana and Ethereum ecosystems. And so again, it creates kind of this reflexive feedback loop that ultimately feeds into prices.
So I've got a watch list that I've created here. So I'm going to go to the Market Watch tab here on the thinkorswim platform, and I've just called it the Intro to Cryptocurrency. And this is my Intro to Cryptocurrency stocks watch list. And so, again, not a recommendation by any means. These are just some of the companies that you and I talked about that have exposure either directly, like Coinbase, for instance, or Mara or Strategy, versus those that have, maybe affiliated businesses and have some exposure or have some exposure to some of the technologies related, but they also have cryptocurrency holdings as well. So, again, this is not in any particular order. We can sort these, but you can see that with Bitcoin and Ethereum and Solana up, anywhere from 4.5 to 10% on the day. Many of these companies have similar movement. If I kind of sort this by uh, percentage change on the day, you can kind of see that relative relationship. Companies like, for instance, Tesla, which has other forces obviously at work on it, but that does have a pretty significant holding. I think they're, what, 16th in terms of the number of bitcoins that they hold in their corporate holdings. They have the lowest correlation in terms of percentage change, but Strategy, which has, I think, arguably the largest holding of Bitcoin that we talked about, for instance, has the greatest percentage change relative to its own price, but you can see that relationship to what's been going on with the spot prices and with the futures prices here, right?
Yeah, 100%. I think that shows a perfect word. Tesla can obviously benefit from rises in Bitcoin's price, but its core model, it's not focused on producing or selling or doing anything with Bitcoin. They produce cars. That's their core revenue driver. And,
Right.
and so again, I think this makes it clear. Strategy, again, their core focus is accumulating Bitcoin. So you're seeing how that acts as a kind of levered proxy today.
So I want to pop over here to a grid that I've built, and this is just my exposure, my Bitcoin or cryptocurrency exposure grid, and it's a very simple grid. Where did it? Okay, it popped down here because I moved some things around. So I've got my single grid. I've got two studies on here. One, I've got this purple line, which is a comparison to / BTC. We'll use BTC as kind of our base comparison here. What I'm comparing right now is Bitcoin to itself, the Bitcoin futures to itself. And then the other study that I have on here is a correlation study. And it is looking at how correlated an asset is to another asset. So the base that I have in the correlation study is also / BTC. So this is where I'm starting from. So I'm going to put in here a couple of different names, and I'm actually going to drop down to that watch list that we created, my personal watch list here, and we'll go to our intro to crypto stocks watch list. And I'll just grab a couple out of this list. So let's take strategy to begin with. The symbol is MSTR. And the purple line is Bitcoin or Bitcoin futures as a relationship. And the study down here is the correlation of strategy to the movement of / BTC. And you can see that they are very highly correlated for the most part. However, there are times at which they become disconnected from the price of and the movement of / BTC here, Jim.
Yep, that's 100%. And that's one of the things to consider when you're owning a crypto stock. It can at time have different debates, different drivers about it than just the core price of Bitcoin. And especially for a company like Strategy that has now they use different methods of debt to accumulate crypto. They're evolving as a company, and so again, it shifts the focus from just this is a company that acquires Bitcoin to thinking about their broader capital structure and if they would ever have to maybe liquidate those holdings. And so again, when you tie it to a specific stock, as opposed to the cryptocurrency or the future, there are other things that can impact it.
So let's take the other end of the spectrum just so that we can kind of get that relationship again. So let's go down here to Tesla that we talked about. We saw on the Market Watch tab having the smallest percentage move today, and again, having its own forces as well. But let's take a look at Tesla and its relationship. And you can see, again, there's some fairly strong directional correlation, although there are times when it moves in an inverse fashion. So this correlation study, a correlation of 1 is a 1-to-1 relationship. A correlation of -1 is directly oppositional to that, right? So when you've got a correlation of -1, they move absolutely inverse to one another. And there are periods of time where the correlation between Tesla and / BTC, the Bitcoin futures, is approaching -1, almost an inverse relationship. And you can see that here on the chart as well. Now we're closer to a correlation of about 0.77. So it's fairly close, but it is not 1-to-1. But you can see the disparity between what we just saw for strategy and what we're seeing now here on Tesla, right?
100%. And this is kind of one of the interesting things about Bitcoin. Historically, over a multi-year period, except for kind of direct Bitcoin proxies like Strategy, and then obviously exchange rate products that purchase it, most companies and asset classes have a low correlation to Bitcoin on a longer term basis, 4 years. And that's because every 4 years, regardless of what's going on in the economy, the new supply of Bitcoin is reduced by 50%. But in the short term, your correlations can change. And again, the core rationale for owning Tesla is not because they own Bitcoin. It's
Right.
because, right, they produce EVs, they're seen as a leader there. It's also as they get into robotics, it's more of a technology play with its own underlying economics. And so I wouldn't expect that to directionally trade over the long term with Bitcoin, but it can, if Bitcoin continues to appreciate over time, it can benefit from those holdings. And so that's why you have to think about it. What is this a core operation or business focus for the company that holds the Bitcoin?
So I'm going to pop back down to this one really quickly here, and this is PayPal, and they have their own business, but one of their core business models is utilizing Bitcoin or cryptocurrencies in their payment model. So it's a correlated business model as well, and they have some. You can see that correlation coming down a little bit higher than what we saw with Tesla. The reason I wanted to do this one is because for some of our future discussions in this intro to cryptocurrency series, I want to have some positions built that we can talk about in terms of those relationships. So I'm going to just do an example trade here on PayPal, which is gapping up this morning and moving in an upward direction. Again, not a recommendation, just simply an illustrative example. And all I'm going to do is I'm going to right click on the chart and we're going to buy and put in our group here, our crypto group. We're going to buy 100 shares of PayPal. I'm just going to edit this. Currently, the midpoint is 43.22. And again, this is a discussion. If you want more information about how to place orders like this, I'm going to open that lock up and we're going to try to get this filled. This is paperMoney, so algorithmically, it's going to fill very likely close to that midpoint. And I'm just going to put this order into my crypto group. We're going to fire that order off. Now, we now own in this account or in this group 100 shares of PayPal. As an illustrative example, this is not any kind of a recommendation. We're not going to put a stop on it at this point. We'll talk about doing that later. But I just want to show some real quick resources, Jim, before we kind of wrap this up. If investors have more questions about cryptocurrency, schwab.com slash cryptocurrency is a location that they can go to for more information. If you have more questions about some of the other things that we've talked about, like trading futures, for instance, you can come over here to our Trader Talks webcast page. All we ask is that you click on the subscribe button if you haven't done so already. And then you can search for some of those topics like crypto. I'll just plug that in here to the search. There's our cryptocurrency basics webcasts. Here's some of the topics that I talk about in my trading futures webcast. So you can dig into those if you want to learn a little bit more about those products as well. Again, not a recommendation, not solicitation about a particular account type. Just wanted to make you aware of those archives as well. So I want to pop right back over here, Jim, and just kind of remind people of what we have talked about today and get your final word on this as we move forward into the next part of this discussion. Next week, we're going to talk about ways in which Bitcoin and Ethereum and cryptocurrency prices are driven by market forces, maybe a little bit more of an intermarket and macro discussion. Yes?
Yeah, so that's the next logical step. We've talked about understanding cryptocurrencies, how to get exposure, and so what actually pushes these things around. We hinted to it already. For everything that's not Bitcoin, Bitcoin is the largest driver of their price. So things like Ethereum, Solana, any
Yep.
other smaller cryptocurrency. But what can impact Bitcoin's prices? There's kind of long-term factors that can drive it, such as adoption. There's short-term things that can impact it, like risk sentiment, the dollar. These are non-dollar assets. And so there's a whole lot of areas that you should be knowledgeable about there when you're going to be investing in cryptocurrencies.
Excellent. Jim, thank you very much. Jim Ferraioli, Director of Crypto Strategy and Research at Charles Schwab. Again, thanks to Connie Hill and thanks to all of you for helping out today and being a great part of the conversation. We will see you guys again next Monday for another in this discussion of basics of cryptocurrency. Take care, everyone. Bye-bye.